We are at the Future Hospitality Summit here in Nairobi, Kenya, and I'm joined by the General Manager of W Hospitality Group, Trevor Ward. How are you, Trevor?
I'm well, thank you very much.
Nice to see you.
Yeah, you too. Yeah.
Actually, last to engage, I've been an avid follower of your analysis for the last 3-4 years, and I'm very intrigued by the research that you did and also the presentation you showed us yesterday during the summit. And just a quick snapshot. So we've been seeing there is a lot of pipeline showcasing in 2026, but only seen a 33% actualization, where we find once a pipeline is announced, but most of them don't get to be actualized. What exactly is the issue around that?
Well, let me explain exactly what my data that I've been presenting. Let me explain exactly what they mean.
Yeah.
So what I'm measuring, and I collect the data from the hotel chains, 53 hotel chains contributed this year. I'm collecting the information on the deals that they have signed for future hotel openings, hotels and resorts. That's what we mean by a pipeline of future development. And the numbers this year are, I say, from 53 chains. They've got deals in 42 countries, 675 signed deals, some opening this year, some opening in years in the future, 168 brands between them, and 124,000 rooms, keys, which is probably a better measurement because you sell a room, not a hotel, to a guest. Yeah. So that's what the data are all about. And I analyze it to death each year, slicing and dicing it as much as I can in where, who, what, when, type of agreement, that kind of thing. And this is our 18th year doing this, by the way.
Oh, interesting. So as I was asking, we're seeing Accor, Hilton, IHG. They're actually performing so well in the market. They're around top three, and
Top five are Hilton, Marriott, Radisson, IHG, and Accor. Not in that order, but those are the top five, the big five we call them.
yeah.
Yeah.
So, and as you're saying, I've seen a lot of trends in these international hotel chains investing so much in Africa, and that this now trend about branded residency franchising model has been taking shape in Africa. What expressed the demand?
Well, I have to correct you that
Yes.
with one or two exceptions,
Yes.
the hotel chains do not invest. They are looking for investors, developers of hotels, which they will manage or brand. And there's a slight difference there. So they're not investors. There are one or two examples where they are, but it's very rare. But the big five do not invest in hotels in Africa.
The business model actually asset light. They don't inject capital.
That's exactly their model. They are asset light. For the quoted stocks, that's what the stock exchange wants. They want to understand that they're fee earners, not real estate developers. So you look at a Hilton, I forget the numbers, Hilton and Marriott, they own very few assets around the world. I mean, probably in one fingers of one hand, but they actually own.
But purely the business model, it's purely asset light.
Really asset light. Yeah, it didn't used to be like that. I mean, when Hilton started business in what was the 1950s, when Marriott started business, they owned all their hotels, but they realized they couldn't grow fast enough through that model. They didn't have the balance sheet or to be able to do that themselves. So they went into being a service provider,
Nice.
if you like.
So basically, that is splitting real estate and hotel management.
Well, that's absolutely right. And it's not, in fact, only hotel management. If you look at Hilton, for example, as just one example, it's public knowledge that 90% of the hotels which bear one of their brands are not managed by Hilton. They're managed by the owners or what's called a third-party operator. Yeah. So what they're doing is signing franchises, which gives the brand to the owner, which gives the distribution system, it gives the quality standard, but they're not there managing the hotel. It's somebody else. Marriott is about 80% of their hotels and resorts are not managed by Marriott.
It's purely third party.
Hmm?
It's purely third party.
Yeah, yes, that's right. But here in Africa, it's only about, I think the figure is 22% of that pipeline I told you about, 22% of the 675, 22% are franchises, 146 properties. Doesn't sound much, about 1/5, but 4 years ago, there were 40 franchise deals. Today, there are 146. And this year is 35% up on last year. Probably back 10 years, I don't think I have the data. There were probably no franchise.
So, and there are some countries that we barely talk about them in terms of investment. Basically, these are some countries in the North African and also some countries that are in the Central African area. So why is it so? But you keep mentioning them, so we don't see any pipeline. We're not seeing international attraction for investment into those countries. What's the reason behind it?
Well, that is the last point, isn't it? That they're not attractive for investment. The countries you're describing are on my map: Sudan, Eritrea, not South Sudan. South Sudan's got Niger, Burkina Faso, Mali. They're
Central
not
African Republic.
conducive. Pardon?
Central African Republic.
Well done, Central African Republic. They're not conducive to international finance or have the depth of local finance, more importantly, because generally speaking, it's local finance for hotels. Generally, but they don't have the investors, the developers to build the hotels that the chains want to brand and or manage. If somebody were to build a hotel in Bangui, for example, the Central African Republic capital, then they could probably get a management company to come in. But as I said before, the management companies are not going to build a hotel in Bangui. They don't do that. Yeah.
All right. So, and as we close the wind up, how has been your experience at the FHS Africa? Are you networking? What are your insights? What are your key takeaways during the summit?
Well, you mentioned the word networking. For me, that's what it's all about. Yes, of course, I learned from some of the sessions. But for me, it's networking because you get so many great people coming here, investors, chains, consultants, and others who come to this. And therefore, if you meet one or two new people, you've made your objective, haven't you?
Yeah.
So that's what it's all about.
All right. Actually, before we wind up, something has actually come into my mind. Recently, we've been seeing there is a lot of trend in investment in luxury hotel segments in the African continent. Why so?
Well, most of the luxury investment is actually going into North Africa, which are very different markets. I'm talking Morocco and Egypt, very different markets from many in sub-Saharan Africa. We're very mature markets. They can take more luxury product. I mean, luxury hotels are very complicated and very expensive to build. Yeah, we talk about, and it varies from project to project. We talk about the cost of a single room in a luxury hotel of $1 million to build. $1 million US, yeah, per key. So a 100-room luxury hotel is going to cost $100 million. That's a lot of money to find to build that hotel. So there's less happening in sub-Saharan Africa than there is up in Morocco and Egypt.
And we've been just moving away from Africa a little bit. Let's go to Middle East. I've seen Middle East. There are a lot of high-end profile hotels that are taking place, and actually it's becoming a safe haven for the wealthy.
Yeah, you can't compare the two. You really can't compare the Middle East, where we're all probably thinking Dubai, Saudi. You can't compare that with any country of the 54 in Africa. So you have to analyze it separately. But Middle East countries have a heck of a lot more money to actually do what they're doing. And of course, they subsidize the airline and everything, the airlines and everything. So it's such a different kettle of fish that you're really very, very difficult to compare them.
So then that tells us that the African governments are failing to support the private sector to invest. And you mentioned that through the subsidization of the airline. because we've been seeing what Ethiopia Airlines are doing,
Yeah.
and also we're seeing also what Rwandan Air is doing. And also this comes at a time when our Kenyan airline, Kenya Airways, is actually struggling. Uganda also, 2 weeks ago, they said that they're going to purchase some few airplanes to do that. So why is it difficult for African government to support the private sector?
Yeah, but you're generalizing it again. We've got 54 countries in Africa. Some are supportive of tourism, some aren't. Look at some of them that aren't supportive. I'm not going to name them, but they have much more impelling issues, for example, healthcare, education, infrastructure. Unless you have those, you can't build a tourism industry anyway. And there are governments like I keep mentioning Morocco, Egypt, Gambia, Seychelles, Mauritius, South Africa, Kenya, Tanzania, which are very supportive of tourism. So don't generalize about Africa.
Correct. Okay, that's very good insight. Thank you so much, Trevor.
Okay.
Nice to see you. Give our audience some of the key takeaways.
Come to FHS Africa next year.